Hi, everyone, and welcome to The Hash. It is Friday, which is always exciting. We've got a lot of crypto and culture news to bring your way on The Hash. My name is Naomi Brockwell, and today we have Jen Sanasi, David Morris, and Zach Seward. Welcome to the show, guys. And I'm going to throw this straight to Zach to start us off. What's going on in the institutional scene?
All right, research note to clients this week from JPMorgan. They say that they've been noticing that institutional investors are switching away, rotating out of gold and into Bitcoin, and something that is reminiscent of late last year when Bitcoin went crazy. So this is an interesting little note distributed to the folks associated with JPMorgan Chase. Interesting to see it. We hear Bitcoin as inflation hedge. It's an unproven theory, but we hear it often. And the quote allure of that is causing some institutional investors to act more favorably toward Bitcoin right now as gold kind of putters along. So I'm going to toss this to Naomi. Naomi, I think the Bitcoin versus gold bugs has been sort of an underlying tension in the space for a long time. Is this validation for the Bitcoin set, or what do you see this as being representative of?
I don't think Peter Schiff is going to be very happy about this at all. So it's interesting because gold prices never went anywhere, as you mentioned. We have all this inflation, and that gold has remained pretty steadily. So you have a quote from this article from a JPMorgan representative who said that the failure of gold to respond in recent weeks to heightened concerns over inflation is a possible driver of the return of Bitcoin. We're always talking on the show about Bitcoin being a hedge against inflation. It's an asset that can't be controlled by any government. That's really alluring to a lot of people when they see that the monetary policy of governments all around the world is just not working out for the consumer's behavior. It's working out for their best interests. It's working out in the interests of the politicians who want to be able to spend exorbitant amounts of money that the government doesn't have and promise their constituents all kinds of things, and that puts us in a tremendous amount of debt, and then we end up paying a tremendous amount of interest to pay off that debt. It comes this very scary tipping point that we're reaching. And then you get inflation that just is really starting to increase. It makes sense that not just as an inflation hedge, people are going to Bitcoin, but they're just looking for something that's outside of the purview of government. They're just looking for something that can't be manipulated by an elite few who are dictating monetary policy in like a closed boardroom. People want more transparency in their monetary policy these days. And now that we have decentralized technology and smart contracts, and we've figured out how to decentralize trust, we can have this. Technology has gotten to a place where this is possible. We don't need these people making decisions anymore. We can just trust mathematics instead. So I think it's a really interesting situation to see what's going on. And there may be something in the fact that people are looking for higher risk assets right now because inflation is so high. It's not enough to just find something that's going to be steady. They're actually looking for something that goes beyond that because they're losing so much money keeping their money just in cash at the moment. So it's just a very interesting situation. Bitcoin is very interestingly positioned right now. But David, I'll throw it to you for your thoughts.
Yeah, I would just piggyback on that last comment about inflation versus risk. I guess it's kind of two sides of the same coin, or it's just a matter of how you frame your narrative. But I really question this idea of the inflation hedge versus just, like gold prices haven't gone up and they are, inflation hedge versus maybe looking for a little more alpha. It's really just about how you frame the story. So I'm skeptical about that side of this. Banks want to make money, and if Bitcoin is making money, then they'll rotate into that. Two other points. One is that the thing about Bitcoin as an inflation hedge that's important to remember is that, in theory, at least, it's a self-fulfilling prophecy. So when you have these institutions actually making these positional moves, that's actually how you get to that point where everybody's in the same system, playing by the same rules, and the inflation hedge aspect actually kicks in. Again, theoretically, I think we're still a few cycles away from seeing that in practice, but it's gaining traction. The other really interesting thing, and I read the Bitcoin.com version of this news, they mentioned that the note also included this idea that apparently institutional investors' behavior was really impacted by Gary Gensler's statement that the U.S. has no intention to make Bitcoin illegal. And I think it's really an interesting kind of a bubble pop moment for me, at least, because I don't know about y'all, but I had no real concerns that the U.S. would do something like that. So it's interesting to see outside investors, people who are not necessarily crypto natives, really hearing this, like China is making Bitcoin illegal and we can't invest in it because what if the US does it too? And I think it'll drive into one of our topics that we're getting up to, which is about regulatory clarity. And I think this is a huge, it seems so trivial for us to have the head of the SEC say, we're not going to make Bitcoin illegal. It seems so, goes without saying, like they're not going to do that, but obviously people needed to hear it. And this is one of the impacts. So I think that's a really interesting takeaway too.
Yeah, David, I think it points to a better understanding of Bitcoin, right? I think institutions are understanding it can't be out-regulated. It's not going anywhere. I think they're seeing other institutions, their peers, their competitors, their colleagues investing heavily in Bitcoin. They're starting to see the use case. It's being rolled out in the mainstream. It's being used by other institutions, by retail investors. And so I think it's just a better understanding. It's a signal of the education that we've called for on the show time and time again. And I think, they just get that it's not going anywhere and we'll see more of it.
Yeah, I will add that I think that Gensler speaking out, I would agree with you, David, that I think that did set some concerns at ease, because obviously if there's one thing that regulators can do is just put a bunch of regulations in place that could really throttle this. Bitcoin can't be stopped. It can't be killed. We talked about Ray Dalio on the show the other day, who's saying government could kill this if they wanted to. I disagree strongly. I don't think they can kill it at all, but they can severely throttle it with regulation. So I think it did really settle some concerns of institutional players to hear Gensler come out and say he's not going to ban it. It will be up to Congress. But I mean, I wouldn't necessarily have my concerns completely allayed from that, because Congress still could put through a bill. If enough politicians think that this is a danger and people should not have financial sovereignty, then certainly they could vote on a bill and outlaw this or just put even heavier restrictions. So I do think that still more education is needed, to your point, Jen. I think education is great, and let's keep going, because, we have to make sure that people see the benefits, that these politicians see the benefits that crypto has to everyday people, that this is a way for them to safeguard their wealth. You are looking out for them by giving them access to things like this. You don't want to ban it out of existence like China has, because the people in China are suffering as a result of this, and all of their savings is just at the mercy of the Chinese government, which is not a good place to be. So definitely we need to keep on the education bandwagon and make sure that politicians understand why this thing has to stick around, even if they do ban it out of existence. Though, as we said, it's a borderless innovation, and it's not going to be killed, and it can exist as long as you want to use it. It just gets a little more tricky to do so. But Zach, I'll throw it back to you.
Yeah, gold, Bitcoin, gold versus Bitcoin, always going to be a thing, and it's always interesting to see gold, Bitcoin, JPMorgan. That is a serious trifecta of interesting crypto stuff. But I'm going to pass the baton, and I'm going to pass the baton to. Hold on. I'm going to pass the baton to Naomi. Naomi, take us over the pond. Take us to.
All right, we're going to London. We're going to be talking about London's Token 2049 conference. Some interesting remarks came out of there. So it's interesting. You had Mike Novogratz on a panel there. He's, of course, the CEO of Galaxy Digital. And he made some great comments, which I think we'll probably agree with, by saying, Gary Gensler, he may be committed, but Mike has questioned the scope of the regulator's purview where crypto is concerned. He says that Gensler wants to be the sheriff of crypto, but he doesn't have full authority because of the newness of our industry. That seems to be spot on from my point of view. Really, this conference just revolved heavily around the lack of clarity still in the crypto space. And Novogratz continued and said the crypto community at large, myself included, didn't do a good enough job lobbying domestic politicians, educating them so they really understand what they're talking about. It goes back to that education issue that we were talking about earlier. And because of that, you have people coming in and wanting to, regulate these things without really understanding what they are, and putting a whole bunch of really bad regulation on the table that misses the point. So I think that, he makes a good point there. And I want to dig into that in a second. I'll just bring up one other thing he said, then I'll throw to the group. So he also said that a central bank issued currency is quite frankly going to be a disaster. He said that governments are not good at innovating, and he doesn't think that anyone in the West wants to give up as much privacy as the Chinese are willing to give up. So it's just interesting bringing up all of these topics in the conference. I have a bunch of thoughts on this, but I want to throw it to the group for your thoughts first. David, I'll throw it to you.
Yeah, the main thing that I fixated on was his comments about stablecoin regulation, and I do think that is, people will disagree, but I think that's an easy win for regulators because we're seeing all of this risk in the system that, there's a way to correct for that would keep these systems functional. If we have some transparency and, for example, align incentives so that the risk of using those reserves as investments is aligned with the interests of the token holders, rather than all that money just going to the people who control the stables, which is basically how it works now. So I think that's a real one. We're obviously facing down a lot of concerns that constantly ebb and flow about Tether in particular, but even something like USDC, where you trust the management, the lack of those standards for reporting and disclosure and things like that create an environment where they're not even really able to entirely keep things transparent just for competitive reasons. So that's one where I do think there's some easy wins to be had. Jen, I saw you wanted to chime in.
Yeah, Novogratz, I feel like just dropped fact after fact. And I fixated on the education piece. It's just Education Friday for me today, I guess. And so that quote that you read in your intro, Naomi, he calls on the industry for not doing enough to educate lawmakers and politicians. And I am in two minds about this because one, is it the industry's duty to educate these people on how to do their jobs and how to be flexible and move with innovation. And two, I feel like the industry, maybe in recent months or this year at least, has been trying to do that, and they've been met with a lot of resistance. We've seen lawsuits and subpoenas. We've seen Congress people and SEC commissioners who understand the space, who are trying to educate from within, and they're even being met with resistance. So I don't know that it's the industry's fault. I think that these lawmakers and policymakers are very resistant to what's going on. And I don't know that the industry could have fixed that.
Yeah, I want to jump in on that, Jen. I actually completely agree. When I read this comment from Novogratz where he says that, the community needs to educate them more, I read that as he wishes that politicians were better educated. Because if you actually look at the history of cryptocurrency and education, politicians don't want to hear from you unless there is a concern that is particularly pressing and in the mind of their constituents. They are going to ignore you. And they have been ignoring us for a very long time. And people have been trying to get through to them and educate them. Some have been more receptive than others, but most of them have been like, this is magic internet money. Why should I care about this? And the catch-22 of the lobbying is that it's not until the constituents of these politicians start to get interested that the politicians themselves get interested. But by the time the constituents get interested, that's when lawmakers are already doubling down on this stuff and putting in bad regulations. So there's like a split second, and there may not even be a split second. It's probably overlapping where you think there may be a window of, okay, they're interested and receptive, but it seems that window is already closed and they've already made up their minds and putting bad regulation on the table. So I agree that the crypto industry has been trying, but people have not been particularly receptive. And if you think about the first time that Congress ever started talking about crypto, that it was mentioned, I think was 2019 in the Libra hearings. That was the first time that we were talking about cryptocurrency. And it was like this big moment where everyone's like, oh my goodness, they're talking about this, on the floor of Congress. And before that, no one would listen to you at all. But by 2019, they were already putting in so much regulation, and they were already regulating Libra out of existence. So it's a very difficult situation. I agree with my interpretation of Novogratz. I wish politicians were better educated. Yes, in so many ways.
Did you just agree with yourself, Naomi?
I'm going to end all my future comments on this show with I agree with my observation.
Exactly. I think my interpretation was spot on of Novogratz's comment. And on that note, let's ponder that. Thanks, Jen. Let's go to a break. What's coming up next?
After the break, we are going to talk about some big name crypto firms investing a pretty decent amount in India's TikTok rival, which may live on the Solana blockchain. We'll talk about that after the break. It's The Hash. It's also Friday. See ya.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
David, take it away. Bring us into the first story.
It's your turn.
We are back.
That was the best exit out of a break I think we've ever
Your
had. Just to
turn.
kind of deer in the headline, and then this mysterious, we are back. Well, David, the first job is about jobs, which is pretty interesting. Let's dive into all that.
That's my fault. I'm glad I made fun of my own awkwardness before I realized it was my fault. Okay, so yes, the jobs report was out this morning, and really it's kind of a weird one. So Wall Street consensus expectation was way undershot. Wall Street was looking for 500,000 jobs. We got 193. At the same time, we got August revised upwards by 131. So it's really kind of a, you might call it a Goldilocks situation, except not in a good way, where it's like right down the middle. So it just means everything's uncertain. At least for me, the first thing to look at is the Dow Jones, which is completely flat today, which kind of tells the story of nobody really knows what these numbers mean for the economy one way or another. The big long-term question that this might have answered if it went a different direction more clearly was Fed policy, particularly tapering its bond buying program, which, you know, it's all very counterintuitive and complicated. But if the jobs numbers had come in a lot worse than this, then we might have seen the Fed reevaluate its plans to end its bond buying program, which would have been bad for the stock market, or good for the stock market? God, I'm not even keeping it straight myself. Anyway, a worse jobs report might have been better for the stock market. A better jobs report might have been worse for the stock market. But right now, we're basically stuck in the middle, and there's no real clear takeaways here as far as I can tell. We did see analysts basically converging on the idea that this means the Fed is not going to change course, which means that they're going to taper bond buying fairly soon, and we'll maybe cross our fingers, get back to some semblance of actually having a real economy. But you know, that's still kind of a pipe dream. Naomi, I think I want to hear from you first on this one.
Yeah, I'll just mention the like good versus bad for the economy thing. I mean, when you have the government printing huge amounts of money, where is that money getting injected? So usually it gets injected straight into the stock market, which is why like we just keep seeing all this bad stuff happening in real life, but then you just get all-time highs in the S&P 500. So it makes you question, like, to what degree is this even reflecting what's actually going on in, you know, the regular economy? Sure, a bunch of these larger companies are, you know, doing really, really well and getting a bunch of money and a lot of kind of handouts. It may be an interesting way to phrase it. Not entirely accurate, but it's interesting to look through it from that perspective. I mean, I agree, David. It is like, it's a very corrupt system. And I think that it's to the detriment of a lot of really struggling businesses out there. When we talk about all of this quantitative easing that's been going on and all this money that's being printed, and we say, well, it's for the benefit of these people. Like, I'm sorry, I just don't see it. I know so many businesses that have gone bankrupt in the last couple of years who actually didn't get the help that they needed from the government. And the people who did, you know, it's a lot of large corporations, or it's handouts to individual people who aren't working, and so because they don't have the jobs, they're getting money from the government, which creates this perverse incentive in the economy where people stop looking for jobs, and then more businesses close down because they can't get any workers, there. So just so many things going on right now.
Meanwhile, Tesla is in the S&P 500 for selling green credits, basically. So, you know, that's where we are.
Exactly. But I do love Tesla, so I'm not gonna dump on them. I think they're cool, but yeah, we could dive into that. But I mean, I agree with you completely, David, that this idea that we've kind of moved away from this real economy and we have this very augmented market that has been augmented in so many different ways. It's a very unnatural state of things. And I really do worry scary about all of this money printing that's going on. When we say that they're thinking of tapering in November, keep in mind they're not thinking of stopping, creating these bonds and printing the money to pay for them. They're not thinking of stopping that at all. They're thinking of tapering the rate at which they're printing these. So there's still astronomical amounts of money that are being printed right now. You've got to think about what's happening with that money. It's just not a good situation. And I think that's why a lot of people are in crypto. And as to the piece that we talked about at the top of the show from Zach, institutional players are now looking into crypto instead of things like gold right now. They're looking at crypto because it seems like a good option to kind of counterbalance all of this tremendous money printing. But it's a scary economy right now.
Question that I think our listeners will be most interested in, which is, do we have takes on what this means for crypto markets?
Zach, you want to say that?
Throwing it out there.
I have no take. I think that I'm of the opinion that the linkage between like macro stuff and crypto stuff is fairly tenuous. I think a lot of people like in the crypto world don't necessarily care about that stuff. I think the money printing stuff seems pretty evident that that's what's fueling a lot of buying of alternative assets, especially high risk ones like crypto. As it relates to the jobs report, I don't know. I don't have a hot take. I don't have any good macro hot takes. So I'm gonna pass this one to Jen for a macro hot take. You have to do a macro hot take, Jen.
I don't got a macro hot take, but I do have a story that relates to TikTok. So let's just go in that direction.
All right. That works.
All right. So Chingari, a TikTok rival from India, has raised $19 million in funding from top crypto firms. The funds are supposed to be used to further development, and the platform is launching a social token on the Solana blockchain. So here we see again Solana really solidifying themselves as the blockchain for creators. I didn't even know that TikTok had a rival in India that was as big as they are. I think they have 78 million. Yeah, they've had 78 million downloads and 30 million monthly active users. So a big competitor. Naomi, I'm going to toss this down to you. What did you take away from this story? Chingari's raising a whole ton of money for a social token. Do you think they can dethrone TikTok, or do you think TikTok's maybe just going to copy them?
Well, TikTok can't copy them in India. So as far as the regulations around TikTok are concerned, TikTok can't operate there. And that is a giant market. So it makes sense that a competitor sprung up there to operate in that area and offer this service to these people. I think that this is awesome. And when I see stories like this with all of the investors that we've seen investing into this and what they're planning to do with this. So they're talking about like allowing users to have e-commerce platforms and create NFTs and, monetize the content that they're putting out there. They're really integrating this stuff at the ground level. First of all, that's huge news for a competitor as large as this one to TikTok, which is like, one of the largest apps in the world, so popular right now. It just seems that if we're embedding crypto at the ground level in this, that's incredibly exciting. To really embed this is huge for the crypto space. But also just talking about how that changes the dynamics on these platforms in terms of monetization is super interesting because we don't have anything like it to compare it to on TikTok. There isn't a monetization option where you can like support your content creators. So a lot of these people are looking to like outside sponsorships and saying, well, I get millions of views, please sponsor my product. They're kind of doing this externally. And then Chingari is saying, well, actually, we're going to incorporate that all in the app to make it easier for content creators. I think it's super interesting. And I love seeing stuff like this. It makes me also, this is going to be a little controversial, so stick with me. When you have all these Bitcoin maxis who are so filled with hatred against other products. And then you see things like this, which are really changing the dynamics for people in India who want to be content creators and allowing them an opportunity to monetize their stuff. And this stuff couldn't be done with Bitcoin. It's just, fundamentally different. Like Solana works in a very different way to the Bitcoin blockchain. So the fact that this is being enabled there, I wonder if these people still look at this stuff and say, oh, it's vaporware. Like, I just don't see it. I just don't see how such innovation and a changing of the dynamics of a giant platform that's popularized by tens of millions of people is vaporware at all. It's very exciting from my vantage point. But I'll throw it to you, David, for your take.
Well, did we see? Did they talk about exactly what the role of the token will be? Is it just a payments thing? Does anybody know?
I'm not sure, but the idea would be like NFTs would all be available. It would be on the Solana blockchain, but I presume it would be a payment vehicle.
I'm a little bit more lukewarm than you, Naomi, on the general idea of utility tokens.
Always lukewarm on the fun stuff, David.
I mean, like the question for me is, and point taken about Bitcoin, but there are still ways to use it if you're just trying to do payments. So, I mean, I wonder why you have to wed a service to a single blockchain if you're just using it for payments and tipping and stuff like that. And I think that in general, in sort of bigger picture, this is great for Solana. At the same time, Solana does still have a long way to go in terms of decentralization and stability, obviously. And so I do wonder about, the wisdom of tying something like this so firmly, because you do have investment in this round from Alameda Research, Sam Bankman-Fried's. Is that a fund? I don't know, but it's SBF, and it's he's very big on Solana. So you're really melding things together that I am not totally convinced are fundamentally necessary to meld together. I mean, if you have a TikTok clone, you can put some interesting crypto payments in there without it being specific to Solana. So, I mean, great tactical move for Solana to get something like this on there. I'm, a little bit on the idea itself.
I think the token is more. I'm going to pass it right to you, Zach. Okay, I was going to say, I think the token could also be more about creating a community, but I'm going to toss it off to you. Maybe you can take that and run with it.
I'm putting this one as MulletFi. This one is fintech, not even fintech, social media on the front, DeFi in the back, MulletFi. I'm calling this as a MulletFi trend. This is going to be really interesting. This is a popular, widely used front end that is going to have some crypto stuff in the back end. And I think we're going to see a lot of that in the coming year. Whether it's with another Solana one, maps.me, they're bringing a crypto wallet into the mapping app. The ability of some of these higher throughput proof of stake chains to live within existing apps is going to get really interesting as people get more comfortable with the ideas around putting some financial applications into their existing service that may or may not have anything to do with finance previously. So that to me is really interesting. And the idea that like social tokens are all
no argument there.
Yeah, no, I mean, and it's like a conceptual on-ramp to social tokens, maybe, right? Social tokens are this weird thing that it's like kind of hard to grasp. Like it's in crypto land, it's still pretty niche. But for these things to move into the realm of like widely popular apps could be really catalytic for like how people think about social tokens and how people think about approaching those, issuing their own, doing cool things with them, whether it's for payments or whether it's for other sort of yield generating schemes that you can plug into DeFi and do cool things with. So I'm hype on it, but I'll toss it down to Naomi for a last thought.
Yeah, I just wanted to say, Zach, you've got people in the comment section, Synapse Novosa, who asks if he uses MulletFi as a DeFi platform name, does he have to pay you a royalty? So don't answer now, think about it, but that's something to hang out maybe on Monday.
We're going to have to make an NFT
Zach,
of the name so that the royalties get transferred.
Idea belongs to all of us.
I stole it from a source. I stole it from a source at Coinbase.
Right here.
Yeah, anyway. Sorry, everybody. Commenter, get in touch. We'll talk. Anyway. All right. Thank you for that, Naomi. I appreciate that. I think we're going to wrap it there. Before mulletfi.com goes live, we're going to shut it down and talk about what happens. But this has been The Hash. It's been a Friday. We're going to have a great weekend. We're going to come back on Monday. We're going to do it all over again. David, thank you for being here today. Jen, Naomi, as always, a pleasure. We hope that viewers, commenters, Hash fans everywhere had a good one. And we also hope that you have a good weekend. So take it easy. See you soon.
Happy weekend. Bye.